Well, good afternoon and welcome to the end of week market review for October 4th, 2013. My name is Jason Waugh. I'll be walking us through today's presentation. Before we get started, we're just going to see a few things that we're going to be going over. First off, we're going to take a look at the market news, just trying to get an idea of what's been going on from a global scale and how it's been affecting the US markets. We're then going to look at some economic reports where we can see what's been going on from the economy's health and seeing if that's been affecting or influencing the reason for our declines in the markets right now. Once we've done that, we're going to be diving in and taking a look at some technical analysis for both the S&P 500 and the Toronto Stock Exchange. While we're looking at these charts, we'll be looking at daily charts as well as weekly charts. While on the weekly charts, we're going to be looking both short-term and long-term, about 6 months all the way to 2004. So we've got quite a bit of chart time frames that we'll be looking at there. And finally, we'll be taking a look at the volatility indicator so we can figure out just how much volatility we're up against right now and whether or not we should be trading with any extra caution. So what we end up seeing here is that the markets did end up down for the week, though they had a small gain today. We can see that for the most part, because of the shutdown, we have been seeing consistent declines. Now the Dow Jones is down 1.22% from last week, with the S&P 500 down 0.07% from last week. You're going to see now that the oil has gone up about 0.87% from last week, though it did decline on the day. It's currently at $103.70 per barrel. You're going to see that silver is down 0.32% from last week's close. This puts it to $21.74 per ounce. We've got gold down 2.02% from last week's close, putting it to $1,311. This is with 20 cents per ounce. And finally, we've got a US Canadian pair down about 0.02% from last week's close. This puts it to 1.0303 pips. Taking a look at the economic reports, you're going to see that we've had a few things here. Some of the stuff is quite interesting, but for the most part, we're really going to be just focusing in on the jobless claims, as this seems to be the number one thing that we look for consistently from week to week. We know that they were expecting about 315,000 claims. What we ended up seeing in reality was 308,000 claims. This means that there were fewer jobless claims or people with no employment than they expected. So it is a good thing to see that this happened, and it did help influence the markets somewhat. Unfortunately, though, it hasn't been enough to outweigh the fact that the market's on a shutdown. Alright, so right now we're looking at the S&P 500. You're going to see that we've found some support at 1680. We see that the MACD is now flat bearish and with the black line below the blue line. You're going to see that we've been finding this support here at the 50 EMA. The 22 EMA hasn't been acting as a very significant sort of support or resistance, so we're not going to be too concerned with that. The MACD has now just flattened out and is flat bearish, but the black line down below the blue line. Because we see this happening, we can expect that the markets are going to find it a little bit more difficult to find support. As long as the markets are bearish, we're going to expect that the support levels are deteriorating. Looking at the S&P 500 on a weekly chart, right now we're looking at about 6 months worth of data. You're going to see that we've gone up and found some resistance at the previous week's cycle highs. This was from several weeks ago. Now what's important to note here is that we are pulling back down to the 26 EMA, where we will likely find some support. We don't need to be too concerned with the fact that we are on our way downhill, because this happens quite a few times, dating back all the way to 6 months ago. But what's important to note this time is that we actually have found a significant point of resistance where our cycle highs really didn't go up that much higher. This is the first time in quite a while. Zooming back even further, you're going to see the magnitude of our gains and just how much of a rise we've had. Yes, we can pull back to that 26 EMA. Yes, it's very possible that we'll pull back to the 40 EMA. If this happens, it's going to look quite negative on a daily chart. But when you really get to sit back and see what's going on a large scale, you're going to see that we still have quite a few support levels below us, both of which have stood up for quite some time. So on a large scale, we're really not that concerned with where the S&P 500 is heading, though the fact that we're finding the new resistance on the daily chart and we have this negative news coming out of the Federal Reserve, and because of that government lockdown, we are inclined to think that we are going to be finding further declines. Obviously, time will tell, and until then, we can only speculate. Alright, so right now we're looking at the TSX. You're going to see that we've found some support around 12,750. This is at the 50 EMA. Now the MACD is declining bearish, and with the black line down below the blue line. You're going to see that this is the first time that the TSX has crossed down into bearish territory for quite some time. This doesn't mean that we're not able to trade anything from the TSX. It simply means that we might be looking a little bit harder and probably wanting to spend a little bit more time on the US ETFs. Looking at the TSX on a weekly chart, you're going to see the tight trading range that we've been trading in for the last several weeks. You know that we're right now bouncing off of some support, and if we manage to work itself up higher, we're going to find some resistance, potentially around the 13,000 mark. Right now we're looking at the TSX. Again, this time we've really zoomed back to 2004. You're going to see that we've had some pretty good runs right now, but we still have quite a bit of overhead resistance that we need to be concerned with. We can see that we need to get beyond 15,000 before we can actually say that the TSX is at its all-time highs. In closing here, we've got our volatility indicator. It's up a little bit over 8.5% since last week. Definitely quite a bit higher considering that we've broken up above the 200 EMA and we need to be exercising caution. We're going to continue to trade with caution until we see some significant reason for the markets to mend themselves. Right now, it's a lot of speculation, it's a lot of hoping, nothing tangible for us to sink our teeth into. Once we see that the volatility indicator dies down and we have that news, then we'll definitely start looking a little bit more aggressive. So until then, if you have any other questions, make sure that you send us an email or a phone call. Both our contact information is listed on the screen. This has been the end of week market review for October 4th, 2013. Ciao for now.